Alright, so what I'm going to do in this video is explain something. I'm going to explain basically this effect. When prices go like this, at each pivot, we call it swing high, swing low, pivot, whatever, something happens. In each leg and during each pivot, something happens. Let's call this leg AB. What is true from point A to point B is demand is greater than supply. What happens at B? What happens at B is supply is greater than demand. That is the only way the turn can happen and go down. At C, demand at that point, demand is greater than supply. That's the only way the turn can happen. At D, supply has to be greater than demand. Only way that that turn can happen is for that shift. Alright? Alright, now the next thing to understand is, let's just examine D. At point D, there is a turning point where supply is greater than demand, and supply continues to be greater than demand until point E. What does it mean when supply is greater than demand? It means the down waves are greater than the up waves. The down waves are greater than the up waves. The down waves are greater than the up waves. So over here, the down waves are greater than the up waves, down waves are greater than up waves, down waves are greater than the up waves, down waves are greater than the up waves, down waves are greater than the up waves. Sure, there's volatility. So what does that mean? That in reality, the point D to E looks like this. Right? Something like that. Maybe not this thing in the middle, but it's possible. And there's springs, the upthrust, and all of that stuff. Okay? So, the point I'm trying to make is that from point D to point E, supply has to be greater than demand. It just has to be. And the down waves have to be greater than the up waves. There's no way to travel from D to E without the down waves being greater than the up waves. In no way. No way is it going to go down unless the down waves are traveling further. It's just not possible. So that's a fact. So down waves are greater than the up waves in terms of price, and in general volume as well, and in general time as well. But for certain price, the volume would get a little tricky, right? And time perspective also gets a little tricky. But the price perspective, I mean, there are some shakeouts and upthrust and all of that, but it will always be greater than the up waves. It's extremely important to understand. First thing is that. The second thing is also at the turning point, the behavior at the turning point must be understood. The behavior at the turning point that creates the turn has to be understood. That turn will include sign of strength, sign of weakness, climaxes, lack of demand, lack of supply, change of behavior, rallies, etc., etc., etc. But if you know what you're doing, you know that I mean, that's what you know what to look for, you know what to expect, and then you kind of filter other noise and look for what you're supposed to look for. But this is very important. We're understanding this relationship and what to expect is tradable. All right. So I'm just gonna pick a market. I picked the bonds. On the bonds, we see 2 points. We see a lot of points, swing high, low, turning points, right? But we're just gonna pick these random points over here and over here. And maybe I'll do this one too. Alright, so we'll take a look at these three and try to observe the behavior at these 3 points to see how the trend changed. And now you're probably thinking, oh, the trend didn't change, or what trend? The point is, from this point to that point, there was a trend, but that trend was on a lower time frame. That's the only way it's going to go from down to up. It has to trend up, and the only way it's going to go from up here to down here is by trending down. It might look like a swing on this time frame, but on a lower time frame, it becomes a trend. So, and what's great about this is you can use any 2 time frames to observe this behavior. So I just picked the lowest I thought, which would be the 15-minute and the 1-minute. 15-minute to show the points, the turning points, and the 1-minute to show the trend change. Actually, the 1-minute is for the turning points. The 15 minutes is more like levels. If anytime you use a higher time frame and a lower time frame, the higher time frame levels, the lower time frame turning points. That's what you're trying to do. So higher time frame levels, tests, just stuff like that, support resistance, breakout tests, etc. Anyway, so let's take a look, and now on the chart at the right hand side is the 1-minute. All right, and the chart on the left hand is the 15-minute. So what about this point right here? Like, what happened? If I can find it. I can't find it. Alright, so the market basically created this level right here, this test or this point right here. Okay? So we're looking for what happens as the market tests that point. Now the test can come in 2 ways. One is a spring, meaning a little bit lower. The second is when it just tests the low bar of that particular pivot, the low bar, meaning it just tags the low bar, the lowest point in that upswing right here, or downswing, however you want to view it. But whatever, this point, it just touches it. Sometimes the test will touch it, sometimes the test will penetrate and cause a spring. Either one is still a test. So this is a test. So what we see here on the 1-minute chart is prior, I can't really do it without covering this swing. Alright, so let me just box this in. So in this swing down, what we see is on the 1-minute now, moving from 15-minute to 1-minute, lower low, lower high, lower low, lower high, consolidation, lower low, lower high, consolidation, lower low. So you see this pretty nice trend on that 1-minute chart. After that, you have a rally. The rally has good price movement and volume on the 1-minute chart. That rally or price movement, etc., was high. In fact, that's why it's even indicated there. It was high enough to create a turning point, to change the quote-unquote balance from supply being greater than demand to demand being greater than supply as a result of the price and volume here, which took out 1, 2, 2 prior highs. So that created a turn with a higher high. Pulled back one, tested, and like I explained, this one is a different type of test. It is a spring. And then it rallies and rallies, and now it drives down heavy price volume action all the way down to support level. So that's what happened on in this point. It's not clear that it's going to turn. All we can see is that this move on the 1 minute, it did kind of exhaust, meaning it was a big price and volume move relative to that particular time frame. It did exhaust. It exhausted this uptrend. That rally, pulled back, attempted to go higher, did not go higher because there wasn't enough volume and price pressure. You see, it's only 1. Went from 15 to 1 on the test in that area, unable to break out, and followed by heavy selling all the way down. And then it found volume. So can you see any indication of a turn? I don't think so. Some will say effort reward. I don't buy it. It's not effort reward. Alright, coming back to this. So in this turning point right over here, all you see is basically on the 1 minute, you see the trend changed. Here, pull back, and then you had another pullback to support and heavy volume. It does not look like effort to me, and for me, this is useless. I'm not buying this. Looks like it's going to break right through. Like crazy, I'm going to buy this? No way. Right. Now, some people might, and I know the reasoning, because they'll say, okay, this is maybe even on the lower time frame, they would see that there's exhaustion here and there's sideways basing action, because these time frames, I mean, that's the way. The same behaviors on, on the lower time frames and even lower time frames. So you got base right here. They might say, okay, this is really going down, up, down, up, down, up, down, up. Then it bases out, etc. But I'm not gonna keep on looking at that many time frames. So anyway, so this is useless. Then it goes up here, right? Goes to up here. Here, I want to see what the action is. Now, keep in mind, I'm looking at this because A, it's moving sideways. Otherwise, I'm not going to try to look at that point. I would rather look at the test right here. Because when it's happening, I wouldn't know, nobody would know that it's going to turn. But if you see a base forming like that, it's an indication. The other thing is, it's better to watch the pullbacks, in my opinion, because trying to get a high that's higher than 1, 2, 3, 4, it can continue higher. Like it can just base out, consolidate, and just go up. But let's take a look at what's going on here. Tension would be on here simply because of what? It's moving sideways, probably at a level or something. I don't really see it at a pullback level, so I would skip this, but it's a good idea just to watch the behavior at that point and see what happened. Anyway, this thing is going up, 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 right? From this point down on that 1 minute chart, where is this? Yeah. So it's going up, 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 up. All of a sudden, the volume increases. What is increased by? Well, first let's see how big is this volume. It's 19,000, which is greater than 7, 14, 10, 15, 4, 2, 10, 3, and 15. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's about the biggest volume in about 10 waves. So there is selling pressure. So selling pressure comes in, and that's what you're looking for. At any point of interest or level, you have to see selling pressure. And it's going to come in two forms: price and volume. So the down waves are going to get bigger than the up waves. At this point, you have 19,000 down, driving price down 4 bucks. I divided this by something, so whatever. So it's 19 and down 4 bucks, which I divided it by I forgot what, but that's basically it's a big down wave. And nothing more rocket science than that. Then it rallies up here. When it rallies, the price shrinks. But how low is this price? That price is lower than 12, lower than the 9, not lower than 3, lower than 15, not lower than the 1, lower than 15. It's definitely lower than at least 2 prior up waves. And in general, if I would take the average, I think this would be under the average. So we notice that high volume down, low volume up. Compare it relatively. It's less than 1/3, right? No, it's less than 1/2, about 1/3. It would be about 21 over here. Then this would be 1/3. It's almost 1/3. Say about 38% or 35% of the volume on this attempted rally. So that's good. Pulls back, then reverses down. So we're done with the second turning point. Let's observe the third turning point. Again, do you want to do this? No, you do not want to. When it breaks, you do not want to counter trend, although some people, they have rubber band strategies and this and that, and anytime the market is oversold, they will look to enter. So here you see the market is clearly oversold, and this I really like. How do I like this? Is because it's very understandable. You have a climax, and I wouldn't know if this is a climax, but take a look at the prior, your area is just it just fell. And what I like about it is that there's at least covering or something that's going on here, because it's bottom, the move goes down, and then there's some type of covering, something that's going on over here. That's why there's high volume on the up wave. It's either covering or they're buying. I don't know what, one or the other, and by covering or buying, I mean either they're covering or buying for a longer move up relative to the time frame. But in any case, the shift that I was talking about from supply to demand has occurred. That shift has occurred right there. From supply being greater than demand to demand being greater than supply. That is evident by this rally and the multiple tests. Now note that when there's tests, it gets very confusing because the market will have 1 or 2 waves that are very difficult to read. So for example, you have 21.17 down, 3 down. That 3 is the dead giveaway that this market is going to go higher on that test that has only 3. Noting that the high volume, low volume, very nice, and then it goes from 17 to 3. It's ready to fly. After that, you have this spring or shakeout, or I don't know what to call it, but you have this drive down. This is where it gets confusing because the drive down has 15,000 contracts. So it gets confusing. You just have to, I don't want to say filter out, but I guess that's the only way to say it. And then it starts moving sideways, telling you that there's accumulation on this pullback going on and price rallies. So from the studies, what we've noticed in these three turning points, the turning point right here is very nice because there's a climax, because there's a change in behavior or a sign of strength, because there's pullback and tests on low volume. Because of all that, it looks very promising for a rally. The up waves are greater than the down waves, not only in price, but also in volume, as indicated by the 20,000 up, 17,000 down, and a test on that alone is the indication. But there's a second test from 17,000 to only 3,000, and off she goes. The other thing to remember is there's always some shit like this that is unreadable or is meant to confuse or is just market behavior. And in this case, it looked like it market became bearish, but what you see instead is a sideways base ready to launch into markup. The second thing is up here. Up here, you notice the market is going higher, 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 higher until the selling pressure reveals itself right here, where you have 19,000. 19,000 down, biggest volume in the trend, in this minor trend. And again, you notice on the pullback, it's about 1/3 of the volume, telling you that the down waves are greater in price and volume than the up waves. Similarly, here, the up waves are greater in price and volume than the down waves, as indicated by the 20,000 and the pullback on 17,000. That was $6, whereas the rally was 11. So up waves are greater than the down waves in pricing and volume, and same here, down waves are greater than the up waves in price and volume. So that's what we see in these two particular turning points, going from the 15-minute turning point down to the micro 1 minute to analyze the 15-minute turning point. And I think that's about it. So I'll be doing more of this and trying to refine it, like really get it down, and then seeing if this is scannable. I doubt it is, but we'll see. All right, take care, bye.